All right, today we are going to talk about setting your prices using markup and better understanding markup and how it ties into how we set our prices. All right, welcome to the channel where we help you make business numbers easier to understand. And today we're going to be talking about how we set our pricing and how markup relates to that. So let's look first at how we typically do this. Well, you're either going to be selling products or you're going to be having services. So if you have a product, typically what you do is you take the product that you're going to sell and you've got the cost of that product. And then what you're going to do is you're going to add a markup amount to it. And that's how you're going to come up with your sales price. If you happen to have a service, you're going to take the service that you do, the products that you use, the labor hours to do the service. We're going to come back and talk about this a little bit more in a bit, but you're going to take the product that you use, the labor hours that you use, add the markup amount to that, and you're going to also come up with your sales price. Now, the question becomes, how much should you be marking up your product? Should it be 10%, 20%, 100%, 50%, 200%? How do you come up with that number? Because there's so many different combinations that you can do. The ultimate decision is a lot of times based off of what you want to put in your pocket. So a lot of times what I find is people just pick a number and they say, hey, I want to make X amount of money off of this product or X amount off of this service, and that's how they come up with the number. But the reality is there really is a formula or something you should be at least looking at when you set this. You don't just want to be picking any number out of the sky because really what your markup is going to cover, it's going to cover your operational expenses and the profit that you desire in your business. So the markup is going to be a combination of these items. So you need to make sure that you're picking the right number that's going to cover both of these. But we're going to take a closer look in figuring out how much you should actually be doing, because you got to understand what's the best way to figure this out. So the first thing is, what do your operational costs typically run? A lot of times when I ask people this, they might go, well, I need $1,000 a month or $2,000 a month or $3,000 a month. Well, first off, your operational expenses vary from year to year, but there's also a typical percentage that they run in your business. The other thing when it comes to your profit desired, the profit is actually kind of misleading in some cases. And we're going to break that down, which is why you once again see the asterisk. So hang on tight. I'm going to explain the profit desired because I think this is where a lot of you guys are dropping the ball and costing yourself some money. Now, when you're looking at your operational costs, what you have is on your profit and loss statement, you have this line towards the bottom of all of your expenses. And tied to that is going to be the percentage that your expenses typically run. So in this example here, you can see that their expenses run about 41.27%. You can actually use that number to help determine if your markup is correct with what it is that you have been choosing. And we're going to, for example, here's an example for you. All right. If you sell something for $100 and your expenses typically run about 40%, then that means $40 out of every $100 is going to be needed to cover the expenses. So when we're picking up our markup, we need to understand that the total sales price is what the expenses run off of, not out of the markup. So it's important that you kind of know what number you plan to sell it for, because then you're going to be able to see, can you cover your expenses? And we're going to pull some examples of all this wrapped together. So hang in there with me. We just want to understand the mechanics of it, if you will, because what you're going to be able to do is you're going to be able to plug it in and test it. And we're going to do a couple examples. All right. So for example, let's just say you sell something for $80 and your expenses run 25%. Well, when you take the $80 times the 25%, you find out that $20 is going to be needed to cover the expenses. So you can do the same thing with yours. Let's just say that you are thinking about pricing something at $200. Just use your percentage from your profit and loss statement, 20%, 30%, 50%, whatever it is, plug it in, and it's going to tell you how much of that money is going to be set aside and needed for your expenses. So everybody can do that test. It's a really simple one that you can do. Now, when it comes to the profits desired, here's where people get into trouble. Profits are company profits, not what you pay yourself, okay? Because there's you who's in the business, and then there's you, the business owner. And I think that's where people get hung up, because you have to make sure that you are covering your pay as a doer, as an employee in the business. And then there's profits that the company is going to make. And what I find is a lot of times people go, well, I'm going to put $40 in my pocket. And they are not thinking like a business owner. They're thinking like an employee, because they want to make $40 as an employee for doing it versus, hey, I need to make X amount as an employee in my business, but I also need to have a certain amount of profit set aside for my business. Remember, you guys are business owners, and you want to start thinking like a business owner. And that's going to be a big mind shift that's going to help your profits actually get much better. When you are paying yourself as an employee, the employee's wage is typically, even though you're not going to necessarily put yourself on payroll or whatnot, but you need to understand that if you're going to be doing a job, that it needs to be put into your cost of goods if you have a service-based business. And in some cases, some of you will be under expenses. It just depends. I have other videos that explain which category it goes into. But your owner piece is actually on the profits that you're trying to make out of that markup. So the reality is, if you don't have the right cost of goods and expenses in the first place with what you're paying yourself as an employee, then your owners, your profit for the company is going to be inflated, because that's not a real profits of the company. Because really what you want is you want to know what your actual profits are for the company, because that's where you get paid as an owner. So you're getting paid two different ways, and they go in two different areas when you're able to do it. So let's look at an example. Let's just say you're a handyman and you make $25 an hour as an employee. So that's what your goal is to pay yourself $25. Now, we're not trying to say that you're worth $50, $60, $70 because I'm also the owner. That's not the way we do this. We're thinking like, what's a fair wage for you to pay yourself as if you were an employee in your business? So let's just say it's $25, and then you take a job that's going to take 2 hours. That means you're going to have an employee wage coming out of this job or this bid that you're doing for $50, because you're going to be on the job for 2 hours. And as an employee, $50 needs to be booked into this for the employee side of the business. And that means that $50 is technically a cost of goods, because the service is where it gets absorbed under your cost of goods. Now, another example I see a lot of people do is they just pay themselves a flat fee for the month. They just take $3,000, $4,000, $5,000. It just depends. Everybody's different. But let's just say you just take a flat fee, and that's how you typically have run your business. Well, then just say, okay, for 40 hours. I know most of you are working way more hours than that, but a lot of times that's because you're also the owner. We need to come up with a number. So whether you use 40 hours, 45 hours, 50 hours, it doesn't matter, but you need to come up with a number of what is going to be assigned to that monthly wage that you take. In this case, if we use 3,000 at the 40, it's going to be $1,875. And you can use this in your calculation versus if you're doing it by the hour like we did in the other one. So whichever direction you go, just know you need to capture the money you pay yourself as an employee doing the thing in the business that you do as an employee. Now, once again, our profits are the bottom line of our profit and loss statement. So in this particular case, he's doing it correctly, and his profitability for the company is 12%. So when we're looking at that markup, it's this 12% as an owner that he's looking for, as long as he captures his pay up in his cost of goods where it should be. And by the way, in this particular example, this guy was losing money when he was originally including his pay in there. The minute he pulled out his pay and started really focusing on this, his profitability as a business owner went up dramatically. And you've got to just remember all the time what actually you're doing when you're using markup as part of your setting your prices. You need to cover your employee wages. If you're not already putting it in your cost of goods or your expenses, you need to make sure that whatever you're marking up those prices, if you're not already capturing this, it needs to be part of this. You also have your operational expenses. We showed you how to find that on your profit and loss statement, so you can make sure. And you don't forget, then you have the company profits as an owner. What's the business's profits? So once again, when we're looking at how to use markup and setting our prices, we're going to have our product costs plus that employee wage that we talked about, all right? And then we're going to add the markup. So it's important that you factor in that employee wage as part of the product costs, and then the markup, once again, is covering your operational expenses and your profits for the business. I know it gets really confusing because you want to put your employee wage part under the markup, but the reality is it needs to be captured and layered on top of the product cost. So if you're going to put it in your markup, then that's fine. You just need to make sure you're capturing it. But technically where it's supposed to go is under the product cost piece that you see right there. So let's take a look at an example. Let's say you have a product that costs $30, and then you're going to have you're doing a job rather, and it's going to cost you the $30 in products, but you're also going to be paying yourself $30 for 1.5 hours of labor. Let's just say you're using $20, so it's going to be $30 for that 1.5 hours later. That means you're going to have these costs of $60. So your product costs and your labor hours come to $60, and then you're going to layer on top of that your markup. And we're going to keep saying, hey, well, I'm thinking about marking it up $50. So if I put that $50 on top of the $60, it's going to give me a purchase price of $110. Now, what we want to do is, knowing those percentages earlier, we're going to plug it in and see if our price that we've created actually works. Does it cover the things it needs to cover? So let's find out if the $50 is the right markup for this quote that this person did. So let's plug it in. We have $110 of a sales price. We have 25% expenses. So if we take the 25% expenses times the 110 in sales price, it tells us we need to set aside $27.50 for expenses. So if we take the $50 markup, subtract out the expenses piece of it, $27.50, that means left over is going to be $22.50 for profits. Now, once again, we want to take a look at this profit amount and say, hey, does this help us hit our profit goal? Well, if we take the $22.50 and divide it by the 110, then that tells us we're going to be doing profit of 20%, 20.45. Well, that's amazing. That's a great profit line. Very few companies have a 20% profit line. And for example, let's just say if it was currently it runs 15%, then that 20% looks excellent. It definitely means we're going to hit our 15%, and we've set a great markup percentage, if you will, for the service that we just quoted out. Now, what if we said, hey, I really want to make it an even $100. I'm just going to make this deal $100. I can do it for you for $100. Well, we still have the same problem, right? We need to go back and say 25% set aside for our expenses. That means it's going to be $25 set aside. So out of our $40 markup, because the $100 minus the $60 it was going to cost us is $40. That's how we came up with the 40 minus this $25. And now we're only going to have a $15 profit for the business. And that $15 divided by the $100 tells us that we have 15% for our profits. Once again, if we go back to our profit and loss statement, if it's 15%, then that means we're still going to hit our target. We're not going to make as much as we would have at the 110, but we're also not hurting ourselves. But if our normal profitability for the company is 20% and we're going to do this job for 15%, now we know we have a problem with the markup that we chose. Hopefully that is making sense. So let's do a quick recap. You want to keep in mind that you get paid as an employee, as an owner, and you need to make sure that you keep those two things separately when you're setting the markup for it. You need to make sure you capture what you're paying yourself as an employee in your business. And then when you're looking at profits and what's included, that's the business's profits. You just happen to take an owner's draw on it, but you get paid as an employee, but then you also get paid as an owner. They're two totally different things, and you need to make sure that you're capturing both when you're setting the markup you plan to use. Also keep in mind, markup must cover your expenses and your company profits. That's what a markup is. You've already got the product costs and associated with that product, and the markup is what you add on top of that. And it's typically going to cover your expenses and your company profits. Now it's your turn. I want you to go back and use this information that you just went through and ask yourself, would you be pricing differently at all? And take some of your most common popular things that you've done and go run the numbers and see if you did a great job at pricing or if there's some opportunity that you could have been doing. And if you like what you see, make sure you hit that like button so other people know they should be watching this video. And don't forget to hit subscribe, where we'll do more videos to help you continue to understand the best way to know your business numbers and become a better business owner. And don't forget, there is a course, Know Your Business Numbers. Just head on over to knowyourbusinessnumberscourse.com, and it's also in the show notes there. Now get out there and be the badass that I know you are.